This is what most people see when they look up day trading. Bold titles, big profits, charts with perfect entries. But those are the cherry-picked screenshots. The reality, it's not that pretty. In studies analyzing millions of real trades, fewer than 1% of day traders made consistent profits. So why does it look so doable? Why do most traders lose money and keep going anyway? Back in the day, trading wasn't just something you tried. It was a career. You needed credentials, connections, a seat at a brokerage. Most traders worked long hours and shouted orders on Wall Street floors. It was fast, competitive, and closed off to nearly everyone. Then things changed. The internet brought trading into people's homes. Brokers started replacing phone calls. Smartphones and apps made it instant. No minimum deposit, no fancy degree. Suddenly, anyone with Wi-Fi could open an account and start trading. Then came 2020. Layoffs, lockdowns, stimulus checks, people stuck at home looking for income or escape. Trading, it offered both. A way to rebuild, a shot at freedom. The promise of a laptop and a beach lifestyle. But for most people, it didn't go as planned. For every splashy headline or meme-worthy screenshot, there are thousands of retail traders quietly losing money every single day. The odds brutal, and the research backs it up. A second study found that 97% of all investors who persisted for more than 300 days lost money. Only 1.1% of them earned more than the minimum wage, and only 0.5% earned more than the initial salary of a bank teller. Most people who get into day trading think they will outperform the average. They believe their intelligence or financial background gives them an edge. According to Barber's research, successful traders become overconfident, and unsuccessful ones are slow to realize they have low ability and slow to stop trading. So what about the 1% of traders who do succeed? Are they lucky? Are they rich? Or are they just the ones who haven't blown up their accounts yet? According to the data, it's not mindset, hustle, or potential. It's track record. One study found that only traders who were already profitable and already experienced had a reliable shot at future profits. Everyone else, they didn't improve with time, they just lost slower. The traders who win consistently share two traits. They've made money before and they know how to repeat that. So now that we have looked at the data, day trading is not profitable for most people. And even those that make money, we're not really sure if that's really worth the risk they're taking. So let's discuss why most day traders fail. First, day trading is time consuming. One of the biggest misconceptions about day trading is that you can just squeeze it in between meetings or after work. You can't. If you're serious about it, day trading quickly becomes a full-time job, without a salary, without benefits, and with no guarantee you'll make anything at all. Institutions have an edge over retail traders. They are paid to trade. They show up every day with institutional tools, real-time data feeds, and entire teams backing them. What's more, the vast majority of trades are made by algorithms trading automatically. Retail traders, you are on your own. And while they are making split-second decisions based on flows and quant models, you're juggling charts, news, Discord alerts, and second-guessing your own risk management. Even if you're in a chat room or following a YouTube mentor who makes probably more selling courses than actually trading. Before you even place a trade, there's the learning curve. Brokers, platforms, fees, tax rules. Once you're in the game, it's hours a day, watching setups form, filtering out noise, managing your psychology, reviewing your trades. The truth is, most people just don't have the time or the bandwidth to compete, and the market punishes those who try to cut corners. But here's the crazy part. Even when traders know they're losing, they keep going. Barber's research looked at millions of trades. His team found that traders, profitable or not, often stayed in the market after repeated losses. Why would anyone do that? Well, it's not logic, it's bias. People focus on their wins, forget their losses, and convince themselves they're just one trade away. And here's the kicker, the market isn't just full of losing traders, it runs on them. One study found that 90% of day trading volume came from traders with a losing history. Even after filtering out the ultra new traders, people with less than 10 days of experience, 74% of the volume still came from people who consistently lost money. But it's not always the same traders. People lose, they leave, and new traders take their place, convinced they'll be different. The faces change, but the pattern stays the same. A constant churn of fresh money feeding the machine. That belief that this time it will work is what keeps the whole thing going on. And the reason that happens is this: the Dunning-Kruger effect. Most people start here. Confidence is high, experience is low, you watch a few videos, win a couple trades, you think you figure it out. That sounds stupid. Everyone's been there, including me. Then losses start stacking up. You go from this is easy to what the hell am I even doing? That's the valley of despair. And from there, most people either quit or start hopping from strategy to strategy, hoping one finally clicks. And look, testing stuff is fine, it's part of the game, but if you never define what you're actually looking for, you just stay stuck in that loop. So here's my take. If you haven't found an edge on a simulator, you probably shouldn't be trading with real money. And when I say edge, I don't mean something you picked up in a course. I mean something you've built, a set of decisions you've tested, tracked, and refined, that you can repeat and that puts you ahead over time. If it doesn't work in a simulator, when conditions are calm, clean, and pressure-free, why in the world would it work live? The sim doesn't give you an edge. It just tells you if what you're doing has any. Test things, be curious, learn, but don't confuse experimenting with having a process. If it works, you wouldn't be selling it, you'd be trading it. So if you're serious, use the simulator, track it, own it, then maybe you're ready to put capital behind it.